All right, let's kick off our call today. Thanks for joining me. I've got kind of a different talk for you today. Hope it's of help to some of you. You know, we spend a lot of time focusing on the agent who's trying to still build their business, because I have a passion in that regard. But a lot of you already have built your business. A lot of you are participating in maybe the strongest real estate market we're ever going to see in Atlanta. And so today I want to really speak to you. If your business isn't where you want to be yet, come see me. I'll help you with that. But today we're going to talk about money management tips and priorities for the productive real estate agent. Now, if you're not the productive agent, you don't have any money to manage. So those are other calls, and we'll get you there. If you're willing to put the effort in, we'll get you there. But what about if you are? What if your business is surging right along with the rest of the market right now? Where do your priorities need to be around money management? Well, from the perspective of the real estate agent, I'm going to share my experience with you. Now, first, a little disclaimer. I'm not a certified money manager, okay? I'm not. I'm not a Wall Street guy. I'm not a banker. I'm just a real estate agent. Okay? But I've been doing this for over 3 decades, and I've made a lot of money doing this. And during the course of that, I've had to learn lessons on how to manage that money appropriately and where my priorities need to lie. And I want to share what I've learned with you today. You can agree with me, you can disagree with me. I don't really care. I just want to share what my experience has been in the hope that it helps some of you. Number one, my highest priority, the most important thing, and nothing else matters until I get to this point. And some of you have got this all out of order. 6 months cash reserves in the bank. Now you can put it in your mattress if you want to. You can bury it in the backyard. My point is 6 months cash reserves. Can I pay my bills, support my lifestyle, cover my tax obligations? Can I support my lifestyle and take care of my family if I don't make another dollar for 6 months? Now, until you get to that point, the rest of this is irrelevant. It won't matter because you don't want to do any of the other things until you have 6 months cash in the bank. Well, what are the other things? Well, retirement planning, investing, insurance, none of those things are important until you've accomplished number one. And if you haven't yet, that needs to be your entire focus. I've got 7 points for you today. Okay? Don't get them out of order. Number one, your total focus is putting 6 months cash reserves. Liquid. You can get the cash immediately when you need it. Number two, health insurance. Health insurance. The number one cause of bankruptcy in this country is lack of adequate health insurance. If you don't have that today, you need to get it. That needs to be number 2 on your priority list. I could tolerate an argument that it should be number 1. I could make that case. I still think cash reserves as a real estate agent allows me to sleep well at night, allows me peace and a sense of security, but then I need health insurance right away too. Number 3, disability insurance. Yeah, it's way up the list at number 3. It's way above investing for current and in real estate and retirement and definitely life insurance. If you have life insurance and you don't have disability insurance, you're making a gigantic mistake. And here's why. You are much more, statistically, you are much more likely to get injured than you are to get killed. The funny news, maybe it's funny, maybe it's not, that if you've lived to the age of 32, you're probably statistically going to live a full life. You just might get hurt during that time period. The odds that you're going to get injured are infinitely greater than the odds that you're going to get killed. So disability insurance comes right in at number 3 for me. Number 4, retirement accounts. Hey, and here's why it's at number 4, and it's ahead of other things. because tiny hinges swing big doors. I want you to start saving as early as possible. I do not want you to start saving for retirement and coming up with a SEP IRA or a Roth IRA or any of these different accounts. You don't need them until you already have 6 months cash reserves, you have a health insurance policy that fully covers you, and you've got disability insurance. But now you're ready. Once you get those, you're ready for starting to save for retirement. And when it comes to that, my tip is little bitty things over a long period of time is where the power is. Tiny hinges swing really big doors. Coming in after retirement savings at number 5, life insurance. Okay, now you're starting to get to a phase in your life when you've accomplished the first 4 where you do need to insure your income. You probably have other people in your life that are starting to depend on you at this stage. In the first 4 stages, you might not. You might be so immature in your financial world that people aren't reliant on you yet. Or you might not be of an age where people are reliant on you yet. But by the time you get to number 5, you've accomplished the first 4, you typically are. Life insurance is to protect the people who are reliant upon your earning ability. You have to first have the earning ability. Some of you are going to say, hey, look, I have life insurance, but I don't have any of the other things. I definitely don't have 6 months cash reserve. Then I say, well, what are you paying for? Life insurance is to protect your earnings for the people who are dependent on you after you're gone. That's all it's for. Coming in at number 6 out of 7, investing. Now look, if you've checked off the first 5 boxes and you're already there, you're ready to start investing in what I would say real estate. Why? You have access and you have information. Now, if you say, well, Mike, I have access and information to Wall Street, then good for you, but most of us don't. Most of us are in a real estate world, and that's what you know. You know where's the good opportunity to purchase and what kind of property to purchase, and you'll understand how to manage it. You'll understand that you have access and you have information. So investing in real estate comes in at number 6. It does not come before the other 5 items. And coming in at number 7, debt reduction. Now look, I know there's all kinds of people right now that are listening to me that think debt reduction needs to be up at the top 6. It doesn't. It doesn't. Is debt reduction important? Of course it's important. That's why it's in my top 7. But it's definitely not important in number 1, creating cash reserves. It's not even close to overcoming that. It's not even close to overcoming number 2, adequate health insurance. Number 3, adequate disability insurance. You need to protect your income. Number 4, beginning the process of long-term savings for retirement. Number 5, life insurance. Protect those who are dependent upon your income. And investing, take advantage of your access and your information. And then when you get those 6 knocked out, now focus on your debt and get to significant debt reduction. Here's an opinion for you on debt reduction. Your house, paying off your house, should be the last piece of debt you pay off. And if you own rental properties through number 6, your investment strategy, you don't need to use your money to pay off that mortgage on those rental properties. As a matter of fact, my personal philosophy is I want all my debt to be on my real estate. I don't want it to be on cars. I don't want it to be on credit cards. I don't want it to be on furniture. If I have debt, it'll just be on real estate. And I want to let the tenant pay off that debt for me over time. The mortgage on my personal home, getting it paid off is nice. When I knock out number 6, when I have no other debt, now the last piece of debt that I'll focus on is my home mortgage. Why? It's the lowest interest debt you're going to have. It is the lowest interest debt you're going to have. You get a tax deduction for your mortgage interest each year. Why would you pay that off before you pay off anything else? Well, it gives me peace of mind and security. That's really the number one, really the only reason why you want to pay that mortgage off. Look, I fully get it, and I definitely agree that peace of mind and security are important, but when you knock out the other 6 first, that becomes so much less of an issue. You already have peace of mind and security when you get your priorities correct. 6 months cash reserve, health insurance, disability insurance, retirement savings, life insurance, investing in real estate, and debt reduction. There's my top 7 tips for money management and setting your priorities. Hope this is of help to you, and I hope you'll go out there today and make it happen for yourself.